Zilliqa is doing incredibly well, but we are doing a four-part series. Today's part two, we're going to use Fibonacci price. Could we have anticipated in advance the key patterns and the ratios before Zilliqa took off? And how can we take those learnings for the next ABC correction that you're going to see? So today's part two, if you haven't watched part one already, where we covered Elliott waves on the Zilliqa price, is really important because now we're going to add in the Fibonacci ratios. It's probably the best way of reading the markets because it applies incredibly well to cryptocurrency. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Zilliqa. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I used to only focus on currency, but now exclusive on cryptocurrency. So let's dive straight in. Zilliqa, I just like the name Zilliqa. It just rolls off your tongue, right? It's a really great name. But here we did, in part one of this series, an A, B, C correction of a wave 2 of a wave 5, right? And Elliott waves is very powerful. You want to know the basics, the three key rules. If you haven't already, take my free Elliott wave masterclass. It's in the link below. And it just goes over all the key basics. You get instant access. In fact, I encourage you to take it now and then come back to this video. Because what we're going to do next with Zilliqa is Fibonacci price. Pattern by itself is powerful, but not powerful enough. We want more of an edge. We want to become the casino where we have the edge in our favor that's going to give us a higher probability of getting it right. And if you act with the edge consistently, that's the whole name of the game. It's getting the edge and then acting with the edge with proper capital exposure. So what we're going to do, first of all, is there's really three things we're going to do. First of all is the retracement. The most basic Fibonacci tool is retracements. And what we're going to do is we're basically going to measure the movement to the upside, and more often than not, the movement to the downside has common ratios. And there's three common ratios that you want to be aware of: 50, 62, and 78.6%. Now, the great thing with TradingView, what we're using here, there's a tool called Fib retracements. And we're just going to measure this low. It takes 2 clicks. 1, 2. Excuse me. We have three ratios that we want: the 50, 62, and 78.6%. Now, to note on the left-hand side, you can see these three lines. There's 50, 62%, and 78.6. You can see the current price is at or near the 78.6. So the other two are not that relevant no more because we've surpassed them already, right? So now we've got a 78.6% correction, right? That's the typical maximum zone of a wave 2, right? So that gives us a massive clue that we're at or near the end of a correction, right? Because we've got this ABC Elliott wave patterns, 3 waves broken down like we covered in part 1. But now we're at this typical maximum wave 2 zone. We've just surpassed it. That's really important. But that's not enough. We want to know that wave A and wave C actually have a direct relationship with each other. And I covered this in the masterclass, so I'm going to do this one relatively fast. This is called a trend-based fib extension, which requires 3 clicks. We're going to measure wave A, project it from this wave B, and the 2 key ratios that we want. And these are psychological ratios of human behavior, of buying and selling activity that typically occurs in waves and sequences that are predictable in advance. That's the whole name of the game. We're predicting this in advance. 62% is the key one over here, and we can see it's clustering close to the 78.6. The closer they are, the more significant the ratios are. Really important. The last thing that we're going to use is something called an end of wave 5. I covered this. It's one of my favorites in a bit more detail. So if you're finding me, I'm going quite fast. It's in the masterclass. I break this down step by step at a slower pace. So really what I want to get across today is the cluster of ratios that gives us valuable information ahead of time so we can anticipate and plan what we want to do next. So the end of wave 5 is a particular ratio. We're going to measure the beginning of wave 1 to end of wave 3. I'm going to show you this. I'll show you this like this. We're going to measure this movement here and project it from here. And there's particular ratios that this more often than not where wave 5s tend to end. And if it clusters with the other degrees of numbers of the lines that we already have, that is very significant for us. Very significant for Zilliqa. And the 3 ratios for an end of wave 5 is 38, 62, and 100%. Now we can see that the 38 and the 62 is right within the current range. So these are very significant. So now we have this very clear zone of Fibonacci price. So now we've got very valuable information that's objective and mechanical before the market's taken off, where we've got pattern on 3 degrees, so wave 5 of C of 2. We did that in part 1. And now we've also got quite a powerful ratio combination on retracements, end of wave C, and an end of wave 5, right? So we've got 3 degrees of ratio counts, really, really important. There are a few others, but we're not going to go into them because we just want to get the main thing. What's the 20% that's going to give us 80% of the information that's going to give us the maximum edge? So now we've got pattern and price. So if you want to learn how to do this, because in part 3, we're going to cover momentum. We're going to add a momentum indicator into the mix that gives us even more confirmation that we're likely to get a trend reversal. It took me a while to create this, and hopefully you appreciate it. It's the Elliott Wave and Fibonacci Masterclass. I cover everything, the 3 key rules, end of wave 2s, end of wave 5s, the key ratios that you need to know, but it's just practice, and everything is difficult before it's easy, but you'll get pretty much instant access. Elliott Wave and Fibonacci Masterclass, how to read the market like a pro. Show me how, yes, pop in your details and you'll get immediate access. It's pretty cool. Most people giving me great feedback. I'd love to hear your feedback. So in the next part, what we're going to do in part 3 is we're going to add in a momentum indicator. Is the weekly and the daily momentum telling us the same information with the pattern and price? If so, then we have a potential very high probability set up on our hands. Now, we know what happened with Zilliqa, so we're doing this in hindsight. With Solana last year, we did it with foresight. And when you're seeing these patterns in advance, this is what we want to do, is be 2 steps ahead before the market takes off. So you're not trying to chase the rocket ship. You want to be on the rocket before it takes off. Because if it takes off, it's hard and there's FOMO, fear of missing out. We don't want to fall for those traps. We want to just be patient and wait for the corrections and then jump on. So let's finish on a quote from my book. Let's go with chapter 4. We'll go for chapter 4. It's Benjamin Franklin, chapter 4. He or she who is good for making excuses is seldom good for anything else. So the great thing about Elliott Wave Fibonacci is it's a leading indicator methodology, meaning based on decades and decades and decades worth of research, it was shown with all markets and all time frames, and cryptocurrency is no exception, that the markets identify themselves in predictable fashions. Like, what's driving the market really? It's speculation and it's fear and greed. And once we know the sociology and the psychological elements, we can actually see the psychology within the price action and then anticipate using Elliott Wave and Fibonacci. And in the next part 3 in Zilliqa, we're going to cover momentum, where we can see what's likely to happen before it happens, and its probabilities and never certainties. So take the masterclass, enjoy it, like, subscribe, hit the bell notification, and I'll see you very soon.